Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, April the 19th. So I had a little bit of a problem with my my platform, and it actually erased all of my support resistance lines, all of my annotations and stuff like that, and all of my daily charts. So I'm going to have to recreate that as we go along. So I apologize for this week might be, a little bit longer in the analysis on each chart, but I'm going to try and keep this video pretty tight. So just a quick reminder, going into next weekend on the, next Sunday, which is the 28th, we have a meetup with the Burlington Investment Group, the Burlington Active Traders and Investors Meetup Group, getting back to basics in order to move forward and advance. So it'll be a great recap on using trend lines, horizontal support resistance, and chart patterns. And we're going to be covering a couple things that you've probably never heard of before. So you'll want to stay tuned for that. It's already been announced. You'll need to sign up at the Burlington group, and the link for that will be going out in the text of the newsletter. So that'll be that'll be available with this video through the the weekly update. So let's just get started into this, and let's take a look at the Dow futures on the daily chart like we usually do. I'm going to have to recreate some trend lines and some other annotations here. So here is what I would consider sort of the sustainable trend line, and then we have a sort of accelerated trend line coming up here, and we broke through that trend line this week, and the 20 period exponential moving average, the 21 period rather is what I use. You can see we broke through here, and we're starting to look a little bit weak, and we had two closes below the 20 period moving average, and it looks like things may roll over. So what I'm sort of looking at here to confirm potential weakness in the market, we haven't really broken down per se yet, but we're looking starting to look a little bit weak. So one of the things that I would like to see is, if you look at the fast stochastics, we're buried to the low side. That's this dark blue line. We're buried to the low side, and now we're hooking up. So what I'd really like to see is a bounce first, and then breaking through this level and looking to see if we'll come down and test some of these lower levels, either this trend line, where this trend line corresponds with this swing point low. So that's sort of what I'm looking at. So let me just mark a few things on the chart here. Decision points. I like to look at the market in terms of decision points. So if we get back above this trend line, then then that analysis is incorrect, unless we come up and put in a double top and then roll over. But essentially what I'm looking at is trendline resistance on the high side, a pushback, into, let's say, somewhere into this trend line, and then to come back down and break this level right here, right there. And then so I'm sort of looking for this pattern. This is essentially what I'm looking for. Looking for a bounce, and then I'm looking for it to come back through here and to decisively break this level here, which is around, let me just draw a line here, 14,397. So that's sort of what I would be looking at, and then I'd be looking for, if we get a decent close below there, I'd be looking for a move somewhere into this level. And then if I just draw a line across this swing point, we've sort of have a little bit of support coming in there, and we have trendline support. We definitely have trendline support coming in there. So another way that I would look at it, I like to look for areas of confluence. So let's take a look at this. If you look, the 618 comes right in around 14,108. So if we fail this level around 14,397, I'd be looking for a push into this zone between at least 14,108 and 14,245, and then ultimately potentially 13,800. Now, if memory serves me correctly, 13,800 was a key level going back a number of months. So 13,800, I'm going to have to see if I can find those key levels I had marked on my chart from previous videos, and I'll try to get them on the chart for next week. So that's sort of what I'm looking at for the Dow. It's starting to look weak. I want to see if it's going to roll over. Decision points are essentially break of this level to the low side, or a break back above this trend line decisively, and either to put in a double top, or even to continue, to the high side. So that's sort of what I'm looking at. I don't think it's a little bit early to, for me to be looking at shorting. So I'm not really looking at that, but I'm looking at potential weakness. So let's take a look at the sister indices and see if they sort of look the same. S&P futures sort of look the same. You've got, just quickly, you've got this trend line here, and then that's probably the cleanest trend line. And then what you have is the same sort of pattern forming, here. And, look to see if we're going to push into this trend line and find support, or if we're going to push back to the high side. So not really that much to talk about in the S&P. Let's look at the Nasdaq. The Nasdaq's looking weak as well. See if we can find some sort of a trend line here. That's probably, the trend line right there. So the Nasdaq is essentially at trend line support. Then you've sort of got a secondary trend line here, but it's not as clean. But the Nasdaq is essentially at trend line support. So if we come back up and we bounce into resistance, you can see the 8-period moving average is already crossed below the 20-period moving average here. The yellow below the white line. So if we get a push back into here, and then we get follow through to the downside, the Nasdaq may actually give a heads up. Keep an eye on the Nasdaq. It might actually give a heads up as to whether the indices are going to fail before the Dow and the S&P, as they are stronger. Okay, so let's take a look at the transports. Maybe the transports will give us an idea. Transports are just really looking choppy, and unfortunately I lost all of my levels on here. I could probably go back and recreate them pretty easily, but if you look at that, we broke this trend line, and then we put in a lower high here. So you've got this sort of, intermediate kind of negative action. So we've got lower high, you broke this trend line, lower high. You're just sort of flirting with this level here. If we do this kind of scenario and push through, then the next break of this, swing point low would be a level to look at to see if the transports are going to roll over. Because recall, we had the transports sort of confirming and leading the charge with the Dow going higher. So from a Dow theory perspective, I think we can look to the transports to see if we're going to get any indications of rollover. It's just testing at zero line here on the MACD. And, stochastics are to the high side here. So that might have been the bounce. And then if we roll over here, this might follow through. So that's sort of what I'm looking at. If we push back to the high side, that's fine. I don't think we're really at a decision point here, but, those are sort of the areas I'd be looking at, or the patterns I'd be looking at. And then if you look at, if we get back above, let's say, that trend line, then, we're probably going to at least come back up and retest those highs. So not a heck of a lot to talk about there. Let's look at a couple of commodities. I'm going to jump over to gold. So gold is something that I was interested in. I actually took a small swing trade on this on Friday. So what I was looking at, what I did was I just, I'm a very small position. What I was looking at was this downtrend. We sort of had an accelerated sort of bloodbath move. A lot of people have been talking about it. We dropped $65 per ounce on this day, which was, I guess, is that Thursday? Let's see, Friday, Thursday, Wednesday, Monday. Yeah, last Thursday. And then on Friday, we dropped like $125 per ounce. So this was a pretty significant move. You can see this wide range bar mainly to the downside. Look at the pickup in volume here. So, in last week's video, I was talking about there was a potential area here, that we could look to maybe buy off the low there. And then, then we had this sort of event that just, blew that event away. So you can see it resized the entire volume. In the gold futures contracts, over probably 600,000 contracts went off. And that, I can't recall that ever happening before, ever since I've been watching the market. So I believe that was sort of the flush move, and I'm looking for a sort of Wyckoff spring, if anyone is familiar with that. Essentially what I'm looking at here is, this was sort of, I thought this was a flush move. I think this is obviously a flush move. You've got a huge pickup in volume. So what I was looking for was some tight days after this big flush out move. And the setup that I'm using to get into this trade, that I'm already in the trade, but was essentially a break of this level. So I'm long. Let's be clear here. I'm long the GLD, right, using options, and I bought a Delta 70 call option that is I think it's the 130 June 22nd calls. So that's the trade that I took. The delta was close to a delta of 70. I'm about 2 months out, just to give it a little bit more room. I'm about 2 months out, and essentially what I was looking at here is that's basically my signal candle. So we had the high volume flush out move. I'm looking for this sort of tight. It's not a clean doji, but it's sort of like in between a doji and a hammer. And you've got this tight day here. And then what I'm looking for is this tight pattern here, a break above this level at 1403. Once it broke above that level, I got in when the position was right. It pushed through, and then it came back, and it was just below 1403. I think I established my position when we were at about 1402.90 or something like that. But the trigger was really the breaking of the price action above this level here, which is the high of this candle. So in terms of managing the trade, I don't have a hard stop in, but because I'm using an option. But essentially what I'm doing is I'm looking for that if we come back below this candle here, and we decisively come below this low here, I'm just going to take a stop. I'm just going to close out my position, and I'm going to say, okay, it didn't work. Now, if we push into, my target is somewhere around, my target is somewhere around, 1500 even, 1503, wherever the price action pushes into this 20 period or 21 period exponential moving average. So that's essentially what I'm looking for. I'm looking for a flush move, and then I'm looking for a reversion back to what I consider a reversion to the mean after this flush move. So that's basically the setup I'm looking at. I think this was sort of the bloodbath move, and I'm just looking for it to, snap back. I think all the sellers got flushed out here, so there's not going to be probably a lot of selling pressure at the lows here. So any amount of buying, even if it's light buying, will probably push it back up into the average. So that's my hypothesis, and that's sort of what I'm going on. So I'm looking for a stop below this candle here, the lows, basically a stop below the lows. I'm looking for a move into the 20 period moving average. If it looks like it's going to break the 20 period moving average and start trending to the high side, I may stay with the move, but at this point in time, that's the setup that I was basing this trade off of. So that's an actual trade that I took in my account, my personal account. And if we look at silver then, so silver's kind of the same idea. You've got this sort of, you've got this flush move down here, and then you've got this candle that formed, and a break of that level looks interesting. And I'm not taking this trade because I took the trade in gold. But a break of that level looks interesting with a stop below the low of this candle. So there's basically this candle here has established the range, and looking for a pushback into the average or the mean. So in this case, the 21 exponential moving average. So that's all I have for gold and silver. Let's take a look at natural gas. Wow, natural gas is looking very, very strong. In last week's video, we had talked about, I'm going to need to draw a few lines on this chart again. I think we were talking about a trade going back in here, and then looking at, we established a lower high in here, and then when we broke above this point here, that's where we were really interested in this trade. But then in the trade, I said the trade was essentially over based on this sort of setup from here to retest to retest some of these levels up and around here. That trade is over. But what I did highlight in last week's video, if memory serves me correct, is that we also have another pattern forming which could be considered a trade on its own. So you've got this sort of cut pattern forming here. You've got this sort of double bottom, right? And then in and around this area, it looked like we formed, it looked like we formed a bit of a handle, and then looking for a breakout of this level may be the initiation of a new trade. So from my perspective, I think that, even though this trade was done when we got into, some of these levels here, the breakout of this sort of cut pattern off of this double bottom and the completion of this pattern, which would have been the break around 427-ish, to me is a brand new trade altogether. So I like this pattern. I like the setup. I'm late to the game. I didn't actually take the trade. I didn't actually take this trade, but I like the pattern. And if I were in this trade, what I would be looking at is a 1272 and a 1618 extension of this sort of cut pattern, which would bring you to, let's see, 1272, 1618 extension of that move. Here's the low, here's the high. That could bring you into 448, 449 up to 485-ish, depending on where you take that from. If you take it from the breakout point, oops, I got the wrong thing there. I got the trend line. Let me just grab these fibs and move it up to the breakout point. The other area that I'd be looking at is 457 to 496, and then $5 is good round number resistance. So everything's firing on all cylinders here in terms of, you're trading above your 20-period moving average. My trending indicators to the high side, the MACD's in alignment. Everything looks good to the high side. So there's, some potential targets if natural gas, follows through and stays above 427. If natural gas actually comes down and pulls below this level, as long as it holds the 21 exponential moving average, then I would still, remain bullish on it as it continues, to hold the 21 exponential moving average with those levels as possible areas to test to the high side from a technical perspective. So let me just take a quick drink here. Okay, and let me take a look at crude oil. Crude oil has been really weak here, but I think it's at support. I was expecting to move higher. We had talked about a potential seasonal trade and, looking for the confirmation of the wedge breakout in order to get long that position. So essentially what you have here is, I believe we were looking around, somewhere around this, this pattern right in and around here. And what ended up happening was I was looking for potential, if we're going to get strength, a breakout to the high side with a retest to some of these highs at a minimum, with $100 a barrel as, psychological resistance. So essentially now I think we're back down to support. We've got a lot of congestion in this area. And what I'm looking for here is to see if we're going to hold like 86.91, let's call it, 86.91. And if this pattern actually busts and it reverses through the high side, then that's what I'd be looking for. Thomas Bukowski describes it as a busted pattern where, the go with breakout of the other side once the pattern is failed, is really the go with. So for example, if I wanted to get long this, what I'd probably wait for is either a break of that trend line, which is, pretty sloppy. I'll redraw that. But let's say this comes out and it looks like it's going lower and then it just busts through the high side. Well, then, this is the area where you would look to consider that a busted pattern and just go with it. So at this point in time, this wedge is followed through. It has followed through to the downside. So at this point in time, it's more bearish than bullish. But I believe it's at support. So I don't really have that much on it. I wouldn't really be willing to take a long here, but I also wouldn't be willing to take a short. So I think in terms of decision points, if this pattern busts and it comes back through the high side, I'd be interested in it, all the way up here. You'd be losing $10, $10 per contract on it. But I mean, from a pattern perspective, that's where I like it. The other area I might look at would be potentially, potentially a break of this trend line here back to the high side, off of this support level so that the risk is established. But I don't really know. The other thing that might look interesting would be if we hold support here, we push into resistance, and then we come back through and break this level, would be to look at shorting, a break of this level. So I'm not really quite sure at this point in time what I'd want to do. I think, you'd have to look at this level down here as, the support if you were to take this short, if we break through there. So, I mean, there's a number of decision points here. It's not really that clear. And I'd be inclined to just kind of pass on crude oil at this point in time. Let's look at, let me switch over to the seasonality charts. Hopefully I haven't lost anything here. So this is one the guys and I have been talking about in our room. Apparently consumer staples have a seasonal start date of around, according to Don Villaloo and Brooke Thackeray's work and John Villaloo. They're looking at a seasonal start date of around the 23rd of April with a seasonal end date around the 27th of October. So this is something that some of the guys in the live trading room here at our physical location in Burlington were telling me about. And I'm building this list based on this seasonal workspace that I've been working on and set up based on, Don and Brooke's work. So this line represents, this vertical line represents where it's triggered. It's looking strong. The average that this instrument goes up is, or the index rather that they track, is essentially 8%, and it's up probably around, anywhere from 2 to 4% from the seasonal start date. So it has the potential to go up another few percentage points. None of us are really that interested in it, even though it looks strong, and it had a really strong close on Friday, just because, it looks like it's long in the trend. Now, having said that, we're probably going to be wrong, and it's probably going to go higher. So if you look at the workspace here, this is a workspace I've been working on to sort of alert me to these things, and I'm going to populate it, with more data in these other sectors. Because the sectors are really what I want to look at on a calendar basis. So if you look at like the consumer staples, the XLP is the ETF that the guys were looking at. You've got seasonal start date, seasonal end date. It's trading above the 20-period moving average, so that's that's a go. The relative strength relative to the S&P, it's outperforming the S&P. That's a green light. You can see that here. It's outperforming the S&P because it's trading above, this 20-period average of the relative strength, comparing the two. And then the stochastics are also, strong. So when we look at it from that perspective, it's all cylinders firing. But we're a little, I guess we're a little bit chicken to get into the trade when we're so high up in this move here, in this trend. We broke out of this trading range all the way at 36.50 back in, January, beginning to middle of January, perhaps end of February, and it just hasn't really looked back. So, it's always hard to get on these trends when they're sort of long into the trend. So let's take a look at the Canadian dollar. And I had mentioned that the Canadian dollar I'd messed up, and I'd actually been lucky enough to eke a profit out because I went long the FXE, which is the euro. So the FX, let me just type this in quickly, FXE. Which was the euro, and I just got lucky and I closed it out. So, looking at that, let's just jump over to the Canadian dollar, which is what I would have been in. So I would have entered calls on this day, and you can see we pushed higher. We found resistance at that swing point, and now I'd be underwater. So we're still holding this low. So the question is, are we going to find, is the Canadian dollar going to get some traction and push back up to the high side into some of these levels? Is it going to go sideways? Is this trade going to fail this year? Don't really know. I'm not in the trade now because I messed it up. Am I willing to take a secondary or an initial position? Not really. It's starting to look weak to me now. And since I'm not in it, I'm not willing to ride it. So if I were still in this trade, I'd be looking for a stop below this low. As my stop out point, I'd be looking at this area as a target, and that's sort of what I'd be looking at. So let's just jump back over to the more traditional charts here, and let's see, was there anything we didn't cover? We covered natural gas, crude oil, some of the metals. Let's take a quick look at copper. Copper's looking really weak here. It looks like we put in a minor double top here. Copper's looking weak. I don't even know where support is on copper. Probably somewhere in and around, these levels. And we are, we tested that level. So that's interesting. It'll be interesting to see if we hold this level and push back to the high side for copper. Copper's looking weak. Let's take a look at, let's look at the dollar index. And let's look at the euro. So the dollar index, we've been talking about a level around, I hate that I've lost all my levels here, 82.35 was a support level. Let me just bear with me here. So we have a band of support around 82.35 and 82.50. New parallel. And let's change this specifically to 82.50. So in last week's video, it looked like the dollar index was getting, weak. And then all we did was we broke support. We actually broke support here and we had a one-day close below it. And then we powered right back through it on a very strong day going back, let's see, Friday, Thursday, Wednesday. Going back Wednesday, we had a really, really strong day back through this support band. And we're back to the high side again. And you can see this minor sort of downtrend that we broke. And then if you look at, let's throw some fibs on here off of some of these support levels, probably in and around there. So you have support going all the way down to, 80, 81. A retracement back even down into these levels. As long as we hold, we could get continuation. But, from my perspective, this looks like we had some consolidation. We pushed back to the high side. Now what I'd be looking at in the dollar index is to see if we can retest 83.49 or 83.50, these highs. Not the spike high, but these more sort of normal highs, if that makes sense, to see if we can retest that and break through it or not. So that's sort of what I'm looking at to see if we're going to retest and follow through, or if we're just going to bounce, put in a lower high and fail. So don't really have a lot there. Just to say that, the dollar index is back on the bullish side. It is starting to put in like a sort of M pattern up here, where the next, the resolution of this sort of pattern here on the fast stochastic would be, a pullback, at least a minor pullback. So that's sort of interesting. Let's take a look at the euro then. The euro's back in and around $1.30. It's just holding above $1.30 now. Let me mark this level on the chart because I can't forget about this level. I've been talking about it for so long. And let me make it a little bit more weighty. So we're in and above $1.30 and we're holding above there. So some sort of strange action going on here. We're holding support on both the dollar index and the euro. I'm not sure how that's going to resolve itself. And at this point in time, I'm not really trying to even hazard a guess to see which way it's going to go. So you've got the euro here. It broke this downtrend line, and now I'm not sure that it even really put in a higher low yet. So it'll be interesting to see how this resolves itself. I hope I didn't miss anything there. I sort of went through most of the markets that we usually cover. I was a little bit thrown off because I lost a lot of my support levels. So hopefully I'll have that, substantially back in order for next week. So just a quick reminder, meet up next Sunday, getting back to basics in order to advance and move forward. We're going to be reviewing trend lines and some new information on trend lines that you probably have never heard of, and some techniques that can be used. And we're going to be looking at horizontal support and resistance in more detail and at some select chart patterns. So I hope that helps. Good trading and investing, and have a great rest of the weekend. And we'll look forward to seeing you at the next video update or at the next meetup. All the best.